Hi guys, so you want to learn a little bit more about property investing, how the cash flow works, negative gearing, and obviously the importance of loan structure when it comes to building a property portfolio. So here we go, we're going to start with just a little bit around cash flow and how negative gearing actually works. So what is negative gearing? So there's the technical definition of it there, but basically what negative gearing is in a nutshell is you borrow money to buy an investment, and it just means that you pay more for costs such as interest and expenses more than what you receive in rent or investment income. So it just means there's a deficit in your income compared to your outgoings. So here we have cash flows worked out in a software that's specially designed for property investors by accountants. And we've got a property value of $600,000. We're just looking at the first column there. Purchase costs, including your stamp duty and legals, etc., is about $24,000. So we've got the loan amount as if you have borrowed the full amount, so almost $625,000 there. I've just put a capital growth rate in of 4%, which I would consider fair and conservative. Inflation rate of 3%. An estimated rent return of $550 a week for a $600,000 property would seem fair. This is based on paying interest only, not principal and interest. Most people with an investment property will pay interest only because they are still paying a home loan off, which has no tax benefit. So it's always best to focus on paying your owner-occupied debt off before reducing any investment debt that's tax advantaged. So we've got rental expenses below that of 26%. Now that covers everything from rates, maintenance, agent management fees, etc. Depreciation of the building at 2.5%. Now that is just a tax claim that actually doesn't cost you anything. It's more of a paper claim, which is fantastic. Loan costs of $727. And we've got a couple with a joint income of $150,000. So in a nutshell, pre-tax to hold that property, when I say pre-tax, so day to day, what it actually costs you in real dollars per week to hold that property, well actually doesn't, because the interest rates are still historically low. You're actually positive by $87 a week. So this property, due to the interest rates being so low, is not negatively geared, but there are still tax advantages there, which you'll see in a sec. So post-tax, the cash flow is $108 positive per week. Why is that? It's because on top of the rent, the couple received a $1,000 tax credit or refund because of the costs associated with the property. So all in all, that property doesn't cost them anything to hold. It's actually positive by $108 per week, while it is interest only. And that's just a little pie chart of who's actually paying the costs in the first year. So 4% is covered by the tax man, 96% by the tenant. Obviously, if interest rates were to jump up considerably, that pie chart may change and there'd be a piece in there that is red, which is what your hold costs would be. Also, speaking of tax refunds, you don't need to wait until the end of the financial year when you lodge your tax return to receive your tax benefits from an investment property. If you had a number of properties, you can actually lodge a tax variation form with the ATO and have that tax available in your weekly or fortnightly income. So it just means your employer will tax you less based on your estimates. But you do need to be accurate with this. If you claim too much, you can be penalised. Now, you would have seen previous presentation showing how you can build a portfolio using equity in your home. Now, based on 4% growth, buying a property for $600,000, after 10 years, you now have It's $263,000 profit on that. Imagine if you were able to get 3 or 4 properties into your portfolio, how much of a positive impact that would have on your retirement or your future wealth. And it's not costing you anything to hold these properties, and you've simply funded it using equity in your own properties. So it can be quite lucrative if you use your property wisely, and that is how a lot of people have built very large portfolios, if you're wondering why. So if you're a budding property investor or you already have a portfolio underway, we specialise in helping hundreds of people restructure or get into the investing space. Put your details in below and let us help get you on the right foot. Now remember, the best investment property is the one you forget you have, and if it's structured correctly, hopefully that should be the case.